Well, Sarah, it certainly is a significant move, and I think it took markets a little bit by surprise because historically the ECB actually has lagged other central bank moves. And here you have Mario Draghi actually acting in a preemptory way, not only putting interest rate hikes on a pause, but deciding to move ahead with a stimulative move. So yeah, I think this is something that is significant and worth watching.
I have so many questions on this. It's so great to have you with us. I think top of mind, though, is does this really make a difference? Do the LTROs change the course of direction for the economy, or does he actually need to reinstate QE?
So it's a great question, and he has indicated that QE was something that's still in that glass bottle, yet to be broken. They are not starting QE again, but they are restarting the LTROs. And the LTROs have a mixed record in terms of being truly stimulative. In some instances, we've seen real accommodation coming from them. In other instances, not such great accommodation. But the point is he's done something here that is actually intended to surprise markets and to be accommodating. He is signaling, in essence, that demand is weak in the Eurozone, that accommodation is necessary, that a pause really is not enough, and that something else is necessary.
Well, he got a surprise. I mean, the euro fell sharply. Perhaps that was the desired effect, but stocks also fell sharply and didn't embrace the stimulative efforts as they have in the past from central bank policy. Why is that, do you think?
So you have to look, at the immediate effect, and then as the information gets processed, where the new trajectory is after sort of the news settles. Typically, this kind of news is stimulative. It does, of course, as you point out, Sarah, depend on what markets were expecting before. But this is something that is more than just a neutral stance. This is something that goes beyond, in fact, what the Fed did at its meeting, where it essentially put interest rate hikes on a pause.
You mentioned that he's done something that the market and we didn't expect. He's surprised everyone. To what extent has he gone that far with this decision? Because he's standing down in October, and he fears there could be someone more hawkish to come. It's his sort of last chance to try and stimulate things again.
That's exactly right, and he wants to get ahead of things. It's always important for central bankers to try to get ahead of where things are going. My sense is that he is interpreting data that's coming in that shows demand pretty weak in the Eurozone, and he is saying, we've got to take a stand against these headwinds. He may be looking at issues related to Brexit. He may be looking at export numbers. He may be seeing things essentially that is signaling to him that it would be better to take early action, and that's what he's done.
Back to the original question on the Fed. I mean, Mario Draghi is the first major central banker to respond with policy action to the global slowdown. Is it going to hit the U.S. as hard, where the Federal Reserve will have to either take a cut or ease in the near future?
So it's a great question, Sarah. I think just to set the table here, we should be clear that the Fed doesn't follow other central banks. It's going to do what it seems necessary to do to meet its dual mandate. So essentially, it doesn't necessarily follow all the time, but it is, in this case, a really interesting signal because, of course, the U.S. is experiencing these headwinds from weaker demand coming globally. And Mario Draghi, I think, has seen it. The Fed has seen it. And now the Fed is, going to have to take on board the fact that the ECB has moved ahead. Jay Powell, is probably going to do it in a couple of steps. First, by putting the rate hikes on a pause, and then, as Janet Yellen points out, possibly determining whether we in the U.S. are going to be moving into a more accommodative stance.
Just one final question again on the ECB and Mario Draghi. Do you think he made a mistake by ending QE when he did, or did he have to at least try when he had a short window, as it turned out to be short window, of better data to see if he could start to remove the stimulus?
So it's always, easier to look at things in hindsight
Right.
and to say essentially, maybe if he had kept it going further, he wouldn't have needed to do the kind of action that he did today. My own sense is that the ECB was interpreting the data that it had at the time, that there were also, particular pressures that it faced regarding keeping accommodation at the levels it had kept it at for as long as it had kept it at. And he was probably eager to start reining in his tools at the time so that he could start to be prepared actually for the next slowdown, which I think is what he's doing.